Hello there. This is Bruce of Fleet Capital Management. It is Friday afternoon, the 23rd day of May, 2025. We're going to take a look at this past week in the markets and try to get a sense of what may be coming up in the near term. So let's just jump right in. We always start by saying the video presentation is intended for educational purposes only, and the discussion of any security is not a recommendation to purchase or sell the security. Please feel free to email me at any time, Bruce at Fleet Capital Management, and I will respond as quickly as I can. This week, JP Morgan's Jamie Dimon said that he can't rule out that the US economy will slide into a period of stagflation. We've been talking about that for a couple of months now as the country faces huge risks from geopolitics. People in his position, CEOs of major companies, they don't use terms like huge risks lightly. They're usually very measured with their terminology, but he said the country faces huge risks from geopolitics, which is basically the Trump administration, deficits, which is the Trump administration, and the bill that the Republican House just passed, and now it goes to the Senate, which most experts are saying will completely blow up the deficit. It could grow by another $9 trillion, and price pressures. He said that I don't agree that we're in a sweet spot. The CEO said in a Bloomberg television interview, pardon me on that one, and he added that the Federal Reserve, and I agree with this, is doing the right thing to wait and see before it decides whether to lower borrowing costs. You know that one of my favorite analysts anywhere in the country is Tom Bowley. Even though I think he is a brilliant man, I don't always agree with him. He thinks that the Fed should be cutting rates. I don't. So I agree with Mr. Dimon because, and here's the reason, tariffs are inflationary, period. That they're inflationary. They cause higher prices. And I don't want to see the Federal Reserve Board lowering interest rates if we are at the risk of higher prices and higher inflation. That's exactly the wrong thing to do. I had mentioned to you last week that Moody's downgraded the US credit rating, citing growth in government debt. Well, I think that there's a strong possibility, I would say a strong probability that this is going to get significantly worse. And let's just think about that for a second. If this GOP bill passes, and if it has a lot of tax decreases for the very, very wealthy and corporate America, that is going to increase our government debt substantially. If it increases the debt substantially, then the credit rating agencies may lower our credit rating once again. The ramification from that is if they lower our credit rating once again, the interest that we have to provide to investors will be even higher, which means that'll put even more strain, significantly more strain on the government debt. So I hope you can see this is a very circular argument, and economists tend to understand the cause and effect of lower taxes for the wealthy, higher spending on the military, higher tariffs and inflation. It's a very complex system that all works together. And for some reason, I have zero confidence that our current administration understands that degree of economics. I have said to you for 4 decades now, you always have to be in risk management mode. Well, I'm going to suggest that we're going to stay in risk management mode for quite some time. I know that the market has been very strong for the last few weeks. And every once in a while, I get an email, which I love. So don't stop doing that, saying, I wonder if we should be getting a little bit more aggressive because the market is doing well. And sometimes it's hard for investors to understand the difference between an investor's thought process and a manager's thought process. Investor tends to not want to miss out on that growth. I don't want to miss out on any growth either. We're on the same team. But I'm looking forward and understanding that we still have debt problems, tariff problems, potential inflation problems, geopolitical problems, great, massive uncertainty in corporate America and the world. So I'm probably slower to wanting to jump in to risk assets than you may be. I just want you to understand that it can be a disconnect. The single most important thing to know is whether the market is going up or down. Everything follows from there. So let's go over to our matrix. This has been updated through today. It's updated every day. And we were really doing well with all of this green. This first column, again, this is for the S&P 500 on a daily basis. This first column looks at volume and momentum. If it says it's up, both volume and momentum are up. Mixed means one may be up, one may be down. Now, why, again, let me remind you, why do I use volume and momentum? Because out of the hundreds of indicators for the market, volume and momentum are the only two that are considered leading indicators. Everything else is a lagging indicator. So that's again why volume and momentum are so important. Using the daily moving averages, the 3-day is still above the 21-day. This is more of a trading system that I don't buy new things if the 3 is below the 21, but it's still above the 21. And when we get to the charts, I'll show you all this. On the weekly basis, we were down for quite some time, going back quite a ways. Then we went mixed up, mixed up, and we went back to down up this week. And I'll show you that on the chart as well. So, if we have volume and momentum on the weekly basis pointing lower, that's a problem. It's a leading indicator. In our daily moving average stack, remember what we want to see is the 20 above the 50 and the 50 above the 200. Well, right now the 200 is above the 20 and the 20 is above the 50. So that's considered more of a risk area, more of a pullback area. Our weekly bear market avoidance indicator, this doesn't tell us if we're in a bear market. It helps us avoid a bear market. The 10 is still over the 20, excuse me, underneath the 20. So that's considered a down movement. And the VIX, which was very high up in the 50s, near 60, did come down and it even went back into the yellow. The yellow is when the VIX is between 17 and 20. That's a cautionary area. Over 20 is very bad. Too much risk and volatility in the market. It looked like we were dropping back down. I was seeing some green on the charts. I was starting to get a sense that maybe some of this risk was behind us, and it just popped back up over 20. Now it's at 22, 28. And on this date right here was when the budget was passed by the House of Representatives. So now it's in the hands of the Senate. Okay. Over the chart, here's the S&P 500. The daily is on the left, the weekly is on the right. Let's start with the daily. Here's the red line is that 200-day moving average, and I was telling you for a week or two that this was an area that we needed to clear. We needed to get above that 200-day moving average. That was an area of resistance being like a roof, and we've got to bust through that before we can go higher. That was a first area of resistance. We did go over it, and we have just now come back down to it. We're still a little bit above it, which isn't bad at all. But the only reason I have this yellow line here is just to remind you that that's the 200-day moving average, which is an area of resistance. Now, when you clear resistance and you come back down, if you hit it and bounce back up, that's actually a very good sign. That's called a test now of support. It was resistance, now it's a floor, it's support. We won't know until next week, but if this holds, this 200-day holds, and we get some positive work out of the market next week, that's actually a very bullish sign. Now, we do have another area of resistance here and one up here, but a critical one is that 200-day. Speaking of the 200 day, the other things that I need to see from the 200 day is when the gold is the 50 day right there. When the 50 day crosses below the 200 day, that's called a death cross. And that is a technical definition of a bear market. So, technically, just based on this chart, we're still in a bear market. So, we want to see that 50 cross back up above the red, which is the 200. That would be a very good sign. The blue line is the 20-day moving average. That's really close to the 200. If we get a bounce next week and the 20-day crosses the 200-day, the red, that's also a bullish sign. But what I'm saying is those are all bullish signals, but they really haven't happened yet. We're not there yet. So that needs to happen. The volume, the on balance volume, you can see how it's almost what I call kissing. The lines are touching. We really don't want that to go back down into the red. It may not. And this is pretty volatile. So if it goes in the red, it can always pop right back up. But we'd like to see some space there. And then this is the RSI, that yellow line, and it is touching that 55 level, which is that gray line. Hopefully, it will bounce next week and stay above it. If it does, that's a bullish sign, but it hasn't happened yet. Okay. In the on the weekly chart, I've got the arrow because this little box that I created, that was a gap, and gaps generally get filled. And you can see today we went down almost to the center of that gap. So if we went down a little bit and then bounced, that would be fine. This is called a pivot or an area of support or resistance. This is a weekly pivot, which is a resistance area. Look how many times price hit that weekly pivot, that this area of resistance, and failed. It failed one, two, three, four, five, six, seven, 8 times, 8 weeks, because each one of these bars is 1 week. It's having a hard time getting through this, and we can't go higher until we finally break through. This is a significant level of resistance for the stock market. We did come down below this level of resistance. This is weaker. This is a 1 day, so it is less important as the 1 week. Okay. And we're in that box, the gap. So I don't know. I know you're probably tired of hearing me say this because I've been saying it for a couple of months now. We're not seeing anything clear on the chart. So we're not seeing clear trends. We're not seeing anything. We're seeing a lot of mixed signals, which makes sense because everything is uncertain from day to day. Tariffs are on, tariffs are off, so the markets aren't really sure how to react. I have this circled because this is the weekly RSI, and you can see it's touching that 55 line. We hope it bounces and goes back up. Let me show you something that is actually rather bullish on this chart. This is the MACD, which stands for the Moving Average Convergence Divergence. And for the first time, you see that green box right there? For the first time in probably 1, 2, 3, 4 months, it's back in the green. That can, remember, momentum, and this is a momentum indicator, can be a precursor to future market activity. Volume and momentum are your two leading indicators. Um, we'll see. We'll see what happens with that. But like we've been talking for quite some time, we have a number of mixed signals. It's just not clear. And if the charts are not clear, this is something I learned decades ago. If the trend is not absolutely clear, don't force it. Don't force it. If a trend, if you look here, you see this, you see all those price bars right there. If I laid a pencil on this, the lead, forgetting this part, the lead would be pointing up, right? That's a clear bullish trend. I don't see a clear bullish trend. I see a V shape, which sometimes leads to a bullish trend, but I'm not getting a lot of support from the other indicators. So again, be patient. We are doing fine. We are holding our own in a very, very difficult environment. And the difficulty comes from uncertainty. We don't know what's happening. Walmart CEO made an announcement last week that they are going to be raising prices because of these tariffs. That made Mr. Trump very upset. I don't know why. Tariffs are inflationary. And Walmart, their whole brand is keeping prices low. Well, they're not even sure how to deal with this. Costco CEO announced prices are going up at Costco because of the tariffs. That's inflationary. When prices go up, that is inflationary. And businesses aren't sure how long the tariffs will be in place, when they'll be taken off, because it seems the policy changes every other day. So if you understand the uncertainty that businesses are having, then you will understand the uncertainty that the market is having because what is the S&P 500? It is the 500 largest businesses in America. It's just businesses. And so across the board, we have uncertainty. So we're not there yet. Uh, Gold had a nice day today. It's popped back up again. It was coming down. I got a little bit worried. I didn't want to give back our profits. I had a stop in here, and then look what happened. It bounced back up just like it's supposed to. It went right to the 50-day moving average and started to bounce. So gold is doing fine, and I do think gold is going to continue to go higher because of the inflationary environment that we're in. But gold is also at a very, very high price. So to have some of this volatility is pretty normal when you're seeing gold at this level of price. Bitcoin has been doing, I mean, look at this. This is when we went into Bitcoin the last time, right there where my cursor is pointing. It's basically just gone straight up. And you know how I feel about parabolic rises. I don't like them because they're not sustainable. Yeah, we make a lot of money, but they're not sustainable. So, but with that said, it seems to me that the environment for Bitcoin is very, very good. Here's why, so you understand. The dollar continues to weaken as our debt continues to rise and the world continues to find new trade partners and exclude the United States, that's very bad for the US dollar. It's very good for Bitcoin. I think Bitcoin could be a huge winner again for us. You can see on the weekly chart, Bitcoin is sitting right in the middle of that level of weekly resistance. So maybe we have a little bit of a pullback and a little bit of a hard time breaking through. That's to be expected, but we've got positive momentum, positive volume. We're a little bit overbought, which is, that's going to happen when you have a parabolic rise. But I'm really comfortable with Bitcoin. We did go into FFLC, which is a large cap, balanced growth. Uh, we went in and hopefully we will see some more rises, but we're going to have to get the market up. It's a more conservative play on large cap growth. I'm not terribly worried about that. We've got a lot of Bitcoin guaranteed return products and 10% down products that should be doing very, very well. We have the BALT, which is tied to the S&P 500, which has been doing very well until the last couple of days, and I think we're going to make money on that. So I think the bottom line is, and on most of our cash, we're earning around 4%, which isn't bad. So we're holding our own, we're doing well, but if you see the markets run up like it has for the last year, let me go back to the S&P, like it has for this is a daily chart for the last couple of weeks. I understand when investors start to think it's we call it FOMO, fear of missing out. Hey, don't miss this, don't miss this, but the charts don't lie, and the charts are not real strong. And I'm glad we waited and didn't go back in. Look at what's happened most of this week. So I'm watching it. If you have any questions, let me know. If you have any questions about your specific portfolio, let me know. But we're in a very difficult time with this administration and with all this uncertainty. And I think we're doing fine relative to what the market is doing. But if you have any questions, if you want to chat about anything that's on your mind, go right here. This is the front page of our website. Click on schedule a video call with Bruce, and you will see my calendar. And you can just plug in any date that works for you, and it'll show up on my calendar so we can talk one-on-one. But that's a story. Have a wonderful weekend. If you have questions, shoot me an email. And other than that, I will be back with you very early Monday morning, and we'll talk again then. All right. Have a great weekend. Bye bye.